24% of small business buyers are waiting for interest rates to decline before buying a business, and here's why that's a bad strategy. Now, this comes from the Biz Buy Sell quarterly report on business acquisition. And so the first reason why it's a bad strategy is, one, most SBA loans are variable rate loans. They are based on a spread of typically prime plus 2 to 3%. So if interest rates are to go down, then the interest rate on the loan that you have outstanding will go down with it. And of course, if rates were to go up, your interest rate goes up as well. Now, the Wall Street Journal prime rate, it typically moves 1-for-1 with what's called the federal funds rate. So if you hear the Fed is going to cut or raise rates, they're going to change the Fed funds rate, which flows through to the prime rate. So if the Fed cuts by 25 basis points or 0.25%, you should expect a 0.25% reduction in that prime rate. And that's going to flow through to a 0.25% reduction in your SBA loan. Now, there are lenders out there that do fixed rate loans, but they typically require higher down payments. And the rate on those fixed rate loans isn't directly impacted by the Federal Reserve. So the Federal Reserve lowering rates, it might not change the interest rate on that fixed rate loan because that prices off the long end of the interest rate market, which is not controlled by the Fed. And there really isn't a direct relationship to the Fed activity and that rate. You could actually see the Federal Reserve cut interest rates and long-term interest rates actually go up, so that fixed rate goes up. Just because the way the bond market works, market's pricing in more growth and inflation going forward, so higher rates in the long run. I know that's a little confusing. It's probably a topic for a different video. And the other reason that waiting doesn't really make sense is it doesn't really have a big impact. So the monthly payment on a, say, $1 million 10-year at 11.25% interest rate loan is going to be $13,917 per month. Now, the payment at 11%, so after a 25 basis point cut, it's going to be $13,775 per month. Now, that $141 per month is nice, but it's not going to really move the needle for the cash flow of the business. And if rates are going to go down in bigger chunks than, say, 25 to 75 basis points that are priced in today, it's going to be because something bad's happening in the economy. And at that point, what's happening on the revenue side is going to be more impactful than what's happening on the interest rates.